Hello, welcome to We Mean Business. It's a week before Diwali and time not just for festivity, family, food and celebration, but also for those long shopping sprees that are pretty much customary to this festival. Estimates suggest about 30 to 40% of total consumer spends happen in this festival quarter. But with the economy slowing down, inflation remaining sticky, interest rates not coming off, and consumer sentiment at significant lows, is the average Indian going to open up his or her purse strings? Will consumer demand that's moderated over the past few months see a revival? And what really will car makers, retailers and manufacturers have to do to lure customers back onto the shop floor? Joining me to debate this is a power-packed panel. Ajit Joshi, CEO and MD of Chroma, the retail store, joins us in the Mumbai studio. Also joining in the Mumbai studio is Mr. A. Mahendran, MD at Godrej Consumer Products. From Bluefin India is Depam Chaudhary. They've recently come out with a very interesting study on consumer confidence analysis. And for a banker's perspective, we have N. Sheshadri, ED at the Bank of India, also joining in from Mumbai. Later on the show, to get a perspective on how demand from the auto sector is faring, we'll also be joined by P. Mahendran. He is, of course, the Vice President at General Motors. So we have a packed panel to, in fact, debate this. But before we begin the debate, just want to flag off an interesting study done by ASSOCHAM that could potentially set the stage for what's expected this Diwali. The industry body feels majority of consumers will spend less this festive season. In fact, 71% of those polled are worried about inflation, jobs, shrinking salaries. 51% feel they should spend less due to price increases, while 54% of those polled say they would buy only in sales or if goods are discounted. What's also interesting to note is that most consumers feel discounts and freebies aren't genuine and should be taken with a pinch of salt. The only one segment that's largely unaffected by inflation and for whom it possibly could be business as usual is the high-income group of consumers. Let's get in Mr. Ajit Joshi first, because he has a bird's eye view of the shop floor. Do you really broadly agree with what ASSOCHAM is saying, or are things different?
We are seeing very different behavior of Indian consumers on our shop floor. If you look at 15th August, which is just the first indicator how the season will pan out for you, it was absolutely brilliant. A single day trading on that day was 21 crores, followed by Navratri and then the Dussehra, which is the second highest trading day for us. We recorded a highest sale of 22 crores, 22.5 crores on that day, which was brilliant. And throughout the Navratri, we have seen people coming back and actually shopping in big numbers. So our feeling is it's very different than what your study shows.
Right. Mr. Mahendran, September to December is a very crucial period for companies. I mean, 30 to 40% is the sort of number that's been pegged at. We've covered more than half of that. We've had the Dussehra period gone by. We have Diwali and Christmas now to look forward to. How has the trend been in the first half, and what do you expect now during Diwali and Christmas?
As far as fast-moving consumer goods is concerned, the first half is tracked very well, definitely in terms of consumption. And as regards the third quarter, we are quite buoyant, particularly the recent announcement by RBI on CRR, etc., the cash flows are coming in. So we at the FMCG sector, we are quite buoyant this season, particularly the Diwali, the festive season, in terms of it should do very well. And broadly, FMCG in all these consumer sentiments, basically, it doesn't get much affected, because fast-moving consumer goods is a lot of utilities and etc. Except a little bit of impulse buying is there in the FMCG sector too.
Mr. Sheshadri, he referred, of course, to the CRR cut by the Reserve Bank of India. There's also a sort of feel-good factor that's set in with the government, doing a lot of reform bit on its own part. Would these cursory moves by the Reserve Bank and really the government make or rather bring about any change on the ground? What's the banking perspective?
No, as far as the retail segment spending habits and spending issues are concerned, we have not seen significant drop in those. The fast-moving consumer products has always been seeing in fact growth, and then if you were to see the saving growth. In fact, there has been marginally going down in terms of savings, indicating that in fact more and more savers in fact tend to spend money. And generally we see in fact in this third and fourth quarter a large amount of spending happening on the consumer durables, and that is where the personal loan segment, the retail segment basically in fact is an indication of how the consumer behavior pattern base is observed. And we are not seeing any significant drop in the interest. So consumers on the retail segment in fact do in fact have a tendency to spend, and festival season basically brings about a large amount of the spending happening there. And liquidity of course is not a constraint. I mean we have seen significant amount of liquidity on the retail segment, and marginally some of the retail segments saw a softening of the interest rate ahead of the busy spending season on the retail segment.
But sir, how's been the demand for a lot of those festive offerings that banks have come out with? I mean, we've had banks offering limited period loans with interest rate cuts. What's been the demand been like so far?
On the personal front, in fact, demand has been in fact going up, and normally the first quarter will not have much of a demand, and the third and fourth quarter in fact will see a pent-up demand, and we see the personal loan segment in fact significantly going up.
All right, if I can get Mr. Chaudhary in, amid all of this optimism, there's one survey, and that's yours, which seems to be a little pessimistic, because you've had a slight bit of uptick that we've seen in October, but it's nothing much to speak about, sir. In the consumer confidence data.
Yeah, that's right. So before I say about the data, let me give you a brief context about what this data is all about. We at Bluefin create what we call the Bluefin Consumer Confidence Index of India. And this is like a monthly barometer of what the consumers in India are thinking or feeling like. And it is through this survey we reach out to 4,000 consumers in 18 cities spread across metros, tier 1 and tier 2 every month, and we talk to them about their aspirations, their spending patterns and their thoughts regarding inflation and employment. And unfortunately the trends that we have been observing, especially since July 2012, is not very encouraging. What we see is definitely suggests that there is a grave slowdown in the consumer sector, which means consumers are not at all comfortable in spending on discretionary items like durables, furnitures, electronics, vehicles, or even purchasing new homes. So they are definitely on a wait and watch kind of a mode even in this festive season.
Right, I want to take that with you. Do you think possibly, how do you explain this dichotomy between the consumer sentiment data and the reality? So possibly, does that mean that the sentiment is actually worse than the reality is?
Really don't know, because we get different sets of figures from different groups, and if you look at yesterday's or today's newspaper, there is a certain amount of correlation between the durable sale and the number of housing loans which get approved, the number of properties which get booked. Dussehra has been brilliant for the builders. So, we expect this Diwali also the similar kind of sentiments to continue. I spoke to the retailers who are in the business of jewelry and gold. They have seen a brilliant Dussehra as well. So there has not been a real slowdown as such in those areas. And today's paper talks about the car sales going up also. So people are spending. The other thing which has happened importantly, we monitor it, rather micro monitor it, is that the month end versus the beginning of the month. And what has happened is, luckily for us this year, the Diwali has come in the month of November, which is when people have just got their bonuses and their salaries. So they're going to come big time into the market. And though the share was falling at month end, we saw some brilliant sales. So another thing also is Chroma is present only in 15 cities. The survey which was done by probably Bluefin was across 18 cities. So the sentiments could be a little different in other cities.
Right. Mr. Mahendran, why is all of this buoyancy then not translating into the actual industrial data that comes out every month? I mean, we've seen not a plunge, but we've seen some sort of a moderation, at least in the consumer durable side. Clearly, there has to be some sort of a slowdown that you're witnessing somewhere in some geographies probably.
I would say that as far as the consumer confidence is concerned, certainly if you look at the first quarter and even the second quarter, there was some sort of a fear syndrome in the consumer side, and there is a conservative outlook is there. But I would agree with Ajit, the kind of the last 15 days if you really look at it, post lot of developments happening and etc. The confidence, if the Bluefin checks it for the next quarter, it can turn around. So all we are saying is the confidence index has been a little bit pessimistic. It can become optimistic.
Right, Mr. Chaudhary, do you then think that possibly, the November and the December confidence data that you'd put out would be a tad better because of this festive spending that we'd see?
A couple of points there. So the data that I was talking about is the readings from October, and as expected, since there is a seasonal effect in October, so we have seen a very minute increase to what was a decreasing trend from July 2012. So in October, the consumer confidence index and one of its components, the spending sentiment index, has increased by around 0.8 points. But then this increase is so minute that it cannot define festive spirits, so to say, and also the absolute level is at like 25, which is way below our benchmark of 50. A 50 benchmark, anything more than 50 is optimism, anything less than 50 is pessimism, and a score of 25 you can understand is deep pessimism. The second point I would like to mention here, highlight here, is the way we ask the questions. So we probe the consumers that do they have plans to spend on discretionary items in the next 6 months, and we have seen very mute response to that. The majority of the consumers have said that they are not planning to buy or not planning to buy anything which is expensive in the next 6 months.
But clearly the Godrejes and the Kromas of the world are not seeing that on the ground, sir.
Well, so maybe it is necessary for the Kromas of the world to influence people to come and spend more by suggesting the fact that other people are spending. So that can be one that can be one ideology there. But we definitely see, and also that point was pretty correct, that Chroma is not present across India and our survey is pan-India. So if you look at the data, if you look at the regional cuts of the data, we can see very interesting trends which are quite contradictory to each other. So like for example in South India, consumers there are pretty optimistic towards spending during this festive season compared to consumers in the north or in the west. In fact, of special mention is consumers in the east. In east, the consumers spending sentiment index is like the lowest. It is below 20, which means really deep pessimism, and it has decreased further in October. So this festive season, there has been no rise in number of people who says they have some plans to spend on some of the discretionaries. Okay, so yeah, there might be regional differences which can cause some discrepancies here. Also, what we are seeing is in the southern IT cities of Bangalore, Hyderabad and Mangalore specifically, there is some solid optimism towards spending on discretionaries.
All right, in fact, before I come in and get Mr. Seshadri's views, I think you wanted to come in.
Yes, I'm not using this forum to promote spending. That's for sure. We are a Tata Sons owned company, so we have certain ethics which we follow in the business. Number one. Number two, what their research shows versus the spends what we are seeing is completely different. Western region has fired up significantly for us compared to what he said. The sentiment in South looks good. In fact, the share was pretty, I would say, average plus in South, and Delhi is yet to fire. Delhi fires around Diwali time. So, different research, and what you see on the shop floor, the customer behaves a little differently.
All right, so there's a lot of dichotomy in the sort of findings of these research players and what people like Chroma are seeing on the ground. But Mr. Seshadri, would you agree that there's a general sort of a dent in sentiment, a general slowdown that we're seeing in the consumption space, especially when you compare it to last Diwali, which was a bumper one?
I would really hazard a comparison between last Diwali and this Diwali. Yes, last Diwali we had actually a good amount of spending happening there, and then there was some amount of lesser consumer spending which we had seen largely on account of the interest rate cycle, in fact not turning out to be more softer, and now there is some amount of softening of interest rate on the housing front. In fact, it has moved at least by about 50 to 75 basis points lesser than what it was last Diwali. And on the auto and other consumer spending, there has been actually softening of interest rate. And it's very early to really see how this type of a softening of a segmental downward movement in interest rate would result in a better consumer confidence. But we have seen the savings per se in fact has slowed down a bit, what was by at least about a percentage point. That means a bit amount of consumer savings basically has been going towards consumables probably, and it is a bit early to say whether it is going to result in a festival savings, but we have seen significant movement in housing loan ever since the interest rate in fact softened a bit by about 50 basis point, and if that is a basis where in fact consumer basically is looking to, we can definitely expect a much larger spend on this festive season.
Right. So, but if you were to segregate this demand scenario between geographies and between the sort of economic discrepancies that we have in the country, how is it different, say, in the rural scenario versus the urban scenario?
We have seen actually substantial amount of spending happening in the urban centers. In rural scenario, in fact, we have seen more savings coming in, signifying that in fact there is a bit of a pessimism in terms of future, and the urban spending has been in fact quite dominant, especially on the major metros and the tier 2 cities, whereas in the rural segment we have seen some amount of savings going up, some amount of in fact lesser spending happening. This is a pattern that we have seen between urban and rural.
And is that sir largely because
geographies? Yes.
Is that, sir, largely,
Yep.
sorry to interrupt you, is that largely because of the delayed monsoon that you're seeing some sort of softness in rural consumption?
Rural spending, in fact, we have not seen significant slowdown in the savings, and we have seen definitely in fact urban spending going, and even our own retailers in fact have reported in fact a much more robust in fact sales in fact in urban centers rather than rural centers.
All right, I want to just get in Mr. Chaudhary here. One of the interesting findings in your survey is also that future expectations index, you have one of these indexes called the future expectation index, which has seen an increase by 1.3 points over the last 1 month. What does that indicate? And also in the debate between sort of savings and consumption, would you say a lot of the money is going into savings vis-a-vis consumption?
The future expectations index, as you rightly pointed out, has definitely gone up. But if we also have another component which talks about the present situations index. So we compare what the consumers are feeling right now and what they are expecting about the future. So the present conditions index is higher than the futures expectations index by around 10 points. So this is a proof that consumers are still okay with the current scenario, but they are very pessimistic about how things are going to be in the future. And the uptick that you see in October, as I said, is primarily a seasonal effect, because in some pockets of the country there has been a rise in plans to spend on discretionary items, so which is again increasing the future expectations index.
And do you also possibly think that this sort of spending slowdown could stem from the fact that your employment sentiment indexes continue to decline? So that essentially means that people would want to save for the future.
Exactly. So this is an interesting trend. From the initiation of the index, when it was launched last year in October 2011, employment was the only silver lining to all the pessimistic numbers that were coming in regarding inflation, regarding spending, etc. Employment was going strong. Consumers were saying that no matter what is happening around me, my job is at least safe, and if I lose my job, there are other jobs available for me to easily get. But for some time now, from May 2012, this employment sentiment itself has been coming down, and it has further brought about more pessimism towards spending, household income, and such related variables. So definitely people are growing more pessimistic, or growing more concerned about their personal employment, job security, as well as availability of jobs in the market. And hence there is a tendency to save more for the uncertain futures to come.
Mr. Mahendran, any sort of variations being seen, say, in geographies or in social strata? Would you say that you're possibly doing better in the eastern part of the country vis-a-vis the western part of the country? Any sort of trend spotting that you've done in that count?
Yeah, the trends are, as far as the regional trends, we do see the trends are pretty good in the north as well as the west, but even the east is okay. But we do see some downtrend in the south in terms of overall FMCG.
And why is that?
Again, when you look at the confidence, the consumer confidence, etc., the south is supposed to be the most conservative, etc. So the fear syndrome and the confidence level has a direct correlation to the south, more in a relative sense to other regions. So I would say that that could be one. But looking at what we hear from the Mr. Sheshadri, the banker, what he is very clearly giving the indication the savings rates are going down, and in FMCG as well as the consumer durables, when the saving rates are going on, it's a very good, clear indicator that the spending habit, etc., will go up definitely.
What about you, sir? I mean, have you seen what are the trends that you're spotting in terms of footfalls, in terms of whether inquiries are actually becoming difficult to translate into sales at the end of the day?
In certain pockets, yes, footfalls have fallen, but people who are walking into the store are buying big ticket items. That's one. Number two, in past 2-3 months, we are seeing a lot of new technology based products being launched. Let it be Galaxy by Samsung or the launch of iPhone 5 today, and we already have got some 60-70 phones booked. Mind you, it's at 50,000 plus, 45,000 is the starting price. So people are actually spending on large amount of technology. We have seen definitely certain categories not performing. During Dussehra, the panels business, which is the televisions business, went little flat. Durables, probably people have postponed their purchases for Diwali. And one thing which I completely disagree in the survey is about consumers feeling that the retailers don't offer genuine discounts, which is not the case. Not everybody is doing the same. If you look at people like Chroma and there are many others, the discounts are genuine. They are backed up by banks like State Bank of India, Standard Chartered Bank, ICICI Bank. If you spend on your credit card, you are getting genuine cashbacks. There are offers which are given by the companies, including Godrej, to your LG, Samsung, Sony, and these are absolutely genuine offers. So many times, and Indian consumers, many times we underestimate them. They know it better than us when to spend their money and when the offers are genuine. So when they walk into the store, they are fully aware of whether the 0% finance is just show-off thing or it's genuine, and they are accordingly spending.
All right, Mr. Sheshadri, given the sort of indications we're getting about consumer sentiment, consumer demand, the worries about employment, about future, what's the sort of banking strategy when it comes to lending, when it comes to consumer loans? Have you been a little bit cautious, particularly because there's been a lot of NPA issues also with regards to public sector banks such as yourselves?
No, as far as retail and then individual loans are concerned, the NPA levels are not basically large, and by and large this segment of loaning has behaved well. We have NPLs all right, which basically are all on the mid-corporate and the larger segments where they have been significantly affected on account of the capacity slowdown and also in terms of interest cost. But as far as retail loans are concerned, the experience of the banks in fact have been good, and there is not much of delinquency, and we find in fact there is a significant interest, and that is an area where it is a focus, and that is the reason why banks in fact have progressively reduced the interest rates, and then the banks make quite a bit of decent margins in fact on those retail loan segments.
Sir, if you had to crystal ball gaze in terms of what happens to credit offtake going forward, after these festive loans, what then? Or do you think that in some sense could be offset by the fact that the RBI would start cutting rates post Q4?
Yes, I mean absolutely. The retail customer, in fact, especially in the urban centers, in fact, would know that he is contracting for the next 3-4 years, and there is definitely an interest rate cycle which is going southwards, and he is basically factoring the EMI and the loan commitments, in fact not today, definitely taking forward the next 2 to 3 years time, and that is the reason why in fact we have seen a large amount of interest in housing loan, a large amount of interest in auto loans, and personal loans also in fact has got a same tendency. So definitely in fact the borrowers, the retail borrowers know for sure that with the interest rate peaking, their EMI commitment in fact would go down as you go along, and then they are quite happy to basically do a spending. I don't see the interest going down on retail loan segment.
Mr. Chaudhary, if you had to look ahead, is the October pickup, the mild pickup that we've seen, sustainable, or will it be limited to the festive period?
I strongly believe this would be limited to the festive period, because though we are talking about a pickup, but the absolute levels are still very low, and we are seeing decline in the more fundamental issues in the mind of consumers regarding employment, household income, cost of living, and cost of borrowing as well. So definitely once the festive season is over, I think the consumers would go back to their old pessimistic ways of living for the time being.
Let's come to the strategies that people such as yourselves are using now to lure consumers in this very difficult environment. What are you doing doing differently in terms of discounts, in terms of promotional offers, vis-a-vis, say, what you were doing last year?
There are a lot more offers which have been offered by the brands. So as a retailer, we don't have to do much in that. However, we have a tie-up with a very large bank where there is a genuine 5% cashback, and which is for the first time, it's uncapped. So if you're buying 2 lakh rupees worth of goods, you're getting 10,000 rupees back. So in a durable kind of a market, it's unheard of. So tomorrow if you have to buy an iPhone, if you buy it on our counter, you will get 5% cashback straight away in your next credit card statement. So these kind of offers I have not seen in past. So that's one. Second thing, there is a lot more happening on the consumer finance front. We have seen a steady increase in people opting for consumer finance. Earlier it used to be 8% of our business used to be on consumer finance. Slowly it's moving towards the double digit now, because a lot of retailers and the manufacturers actually absorb the subvention charges. So end consumer actually doesn't pay as processing fee or anything. It is a genuine 0% finance scheme. So these two schemes are put together. The discount offered by the manufacturer and the retailer and the 0% actually has helped us to push sales further. The second thing is, what I have seen is the negative news sells very well in our country. So moment we say that there is pessimistic view across, you start believing in it. So we as a company have decided we will never believe in these kind of things. And if you see, in 6 years of Chroma's existence, we have seen 2 recessions, but year on year we have seen a growth, and I'm talking about year on year growth, more than 29% to 50% plus.
Okay, before I come to Mr. Mahendran, I just want to get in Mr. Chaudhary in over here. Clearly Ajit Joshi is not agreeing with you at all. He's saying he doesn't believe you.
Well, I am saying what the data is all about. So let me just support my claims using data which is out there in the market, which is like hard data and not sentiment data. So we have seen there is a declining trend in mobile, in cell phone subscriptions, which is there in the as based on data published by TRAI. We have seen there is a decline in air travel as the data is published by the Directorate of Aviation. And also there was a discussion around vehicle sales. Well, vehicle sales has not improved. In fact, I was reading an article in the morning today in one of the leading newspapers which said that only Maruti and Mahindra were the saving grace. Apart from these 2 brands, all other brands including Tata, GM, Ford has seen a very negative kind of a negative growth rate in sales this month. And what has basically improved is 2-wheeler sales, again led by demand from rural areas, not urban regions. So these hard data is again pointing out to the same thing, that consumer sentiment or consumer sector is on a downside.
All right, we just take a quick break at this point. On the other side, we'll discuss what sort of strategies that retailers, manufacturers are using, in fact, to tide over this slowdown that Mr. Chaudhary is talking about. Stay tuned. Welcome back. You're with We Mean Business. We're discussing whether Indians are willing to loosen their purse strings this Diwali or whether the consumption slowdown is really a discernible one. Now, let me just get in Mr. A. Mahendran of Godrej Consumers. Sir, I want to understand what sort of strategies, manufacturers such as yourselves use at a time when possibly you don't claim there's a slowdown, but when there's a lot of uncertainty, what sort of strategy do you use in terms of inventories, in terms of how you deal with the sort of, future going on?
See, when you get these kind of a trends or the indications, as manufacturers and marketeers in consumer goods, we do go for a focused, innovative platform. We do a lot of innovations and we gear up a lot of new product developments, etc. That's one. The second one is we also look at a lot of consumer promotions where we give three for three, we give for free, something like that. So a lot of consumer promo offers also will flow in when the sentiments are, the confidence levels are low. So that.
Are you targeting any specific markets, because Chroma is largely urban, but are you targeting any specific markets to drive growth? Because I remember CRISIL coming out with a report saying that rural consumption is now superseded urban consumption. So in that sense, are you targeting that region? Are you targeting any specific markets?
Yes, we are targeting definitely in the last, at least in the last 1 year. Our focus is a lot of the rural marketing basically. And when you talk about rural marketing, and the other one is, can we design a product for the rural India? If you take any particular standard FMCG products in the urban India, when you go to the rural India, you need to design one for the rural India. We do that. So there is a clear segmentation and target on the rural India, and the tracking of the growth rate of rural is much higher than the urban. The growth rate from rural India is much higher than the urban India. So we see a good traction on the rural focus.
But that's going to be sustainable given that the monsoon has been delayed?
Yes, we were fearing about that, but I think this delayed monsoon finally it got back. So there is no major impact on the monsoon failure from a consumer consumption point of view.
But specifically with regards to inventories, have you decided this year to keep it low?
Okay, and the inventory part of it, most of the FMCG manufacturers market in the consumer goods, we had a very bad hit 3 years back, so all of us are holding the inventory level very low at that time. So we monitor the just-in-time distribution pattern. So the number of days held at the trade level is not more than 15 days. So there is no major issues on the inventory. We don't stock inventory.
Mr. Joshi, you were telling me in the break about the sort of demand, the huge demand that you've seen for the iPhone 5, for instance, which by the way has launched today. So, are there certain categories, for instance, like phones, where India is a big market and, everybody now wants to have the latest phone, where you're seeing traction, and there's certain categories where there's absolutely sort of no traction, people are waiting for better technologies to come in?
Absolutely. If you look at any of the Apple products, any of the Samsung, Lenovo, Acer, so I'm talking about the tablets as a category, I'm talking about the laptops as a category, I'm talking about mobile phones as a category. People are just spending. They're just waiting for a better technology to come. And interestingly, we are seeing Micromax, which has got a tablet at an entry level at 6,000 rupees. We are selling like 3,600 units a week. At the same time, we are literally pleading Apple and Samsung to give us the high-end tablets in enough stocks, because there is so much of demand which is outnumbering the supply we are getting from some of these leading brands. So consumers are today very, very smart. They know exactly when to spend, how to spend, and one important thing we should not forget is that today tablets and the laptops are used more by the students, and when it comes to your sons or daughters' education, Indian consumer doesn't care about whether there is a recession or not. We want to prioritize our investment into our children's education. So we have seen a huge surge in that category. It's more than 40% at times.
Okay, so Mr. Chaudhary, do you think possibly, there's a sort of blurring of lines between what is essential now and what is discretionary, and that's possibly why people like Chroma are not seeing a slowdown at all?
If you are talking of iPhones or Samsung tablets, then I think this is just being limited to the premium segment of consumers who have a particular high annual income. But Indian consumer set as a whole is not just this segment. It's the consumer who's like pulling a rickshaw to a consumer who's driving a Jaguar. So yeah, in certain segments there might be some growth due to new product launches, etc. But overall, in majority of the consumer segments, there is a slowdown, as our data has been consistently saying since May, June of this year.
So what he's saying, in fact, is that the high income group, which typically buys these discretionary items, is really not seeing a slowdown. But are you having to offer compelling discounts or value propositions to say the lower middle or middle class income group, which typically wait for the sales season to start in?
Not really. We are not seeing that, particularly in the middle level, no. But of course, as you said, premiumization is the in thing, and then there are a lot of the upper end, the top of the pyramid consumption is very high. But the middle, we are not seeing that. As you are referring to, no, we are not tracking that, at least in the FMCG sector. So the consumptions are pretty good, and the growth rate are pretty good. And we are talking about in many sector categories we are growing at 20% plus.
All right, last sort of thoughts before we start wrapping up and getting the auto discussion going. First to you, Mr. Chaudhary, what do you really think needs to be done by the government, by the Reserve Bank of India possibly, to get those consumer confidence, to rather get that consumer confidence data, going into the positive territory going forward?
You know what, the reason behind the fundamental issues getting weak, which by fundamental I mean employment and household income confidence towards these parameters becoming weak, is primarily because the slowdown in the Indian economy has persisted maybe for a bit too long, which has again impacted the confidence of consumers towards these fundamental issues. The government definitely needs to instill confidence towards employment and growth back in the minds of the consumer, which will then definitely take care of their spending patterns. They'll come out and spend more. But until and unless the employment scenario, the income scenario is not stable, it's in a state of flux, things will remain like this. Consumer sector will continue to perform, spendings would be very muted. So definitely the latest policies that has been announced, if more such policies are announced which ensures that the Indian slowdown, the Indian growth, slowdown in growth is stopped by say early next year or something, then that is something which the government need to focus on.
Okay, two quick suggestions from each of you on what really needs to be done to maybe not revive but at least boost this consumption trend in the country. First to you.
The announcement of reforms which was made needs to be implemented. We just heard about the reforms being announced, but that needs to be implemented at the grassroots level, at the state level, at the corporation level. If that happens, the sentiment will be back, and if and when the Reserve Bank feels they need to lower the rates, they have done a wonderful job so far, but if they lower the rate, sentiment will be back in a big way.
Mr. Mahendran?
As far as the consumer sector is concerned, what we feel, apart from the RBI opening up the CRR and the reduction there, certainly it will help the bank rate if they bring it down. But from FMCG sector, we feel that this FDI opening up will definitely help, and government has given those clearances, but the $1 million question is the implementation part of it, and we hope that gets implemented as fast as possible.
All right, so we'll possibly have to wait for one more year to see whether FDI is a game changer. But joining in now on the phone line for a sense of what's happening in the auto sector and how the Diwali season will pan out is Mr. P. Mahendran, the Vice President of General Motors India. So thanks very much for talking to us on a day when in fact you've had a new launch. Is this an anticipation of the festive season, and is new launches really the way to go when the demand is so sluggish?
See, first and foremost thing, because I do understand that the market continues to remain sluggish, but you will still ask me why should we launch a product when the market is sluggish? Let me tell you, because if you have to create excitement in the market, you have got to launch products, and otherwise also the products are launched not keeping the short term in perspective, because basically it is this has been known for quite some time. It is kept the long term perspective in mind. So therefore, even otherwise, what happens is in the festival season, it in many cases brings in additional volume. As a result of which, yes, we feel that this is the right time to launch a product. It will create an excitement in the market. Second is the festival season. Third, it is done based on the long-term perspective in mind.
Sir, but how do you look at the October uptick in the numbers, and how will demand pan out in Diwali, both for the industry and from GM's perspective?
Let me tell you, if you look at the overall industry, there was marginal growth in the month of October. Normally, what happens is in the festival season, there is an incremental growth ranging from 20 to 25%. But this festival season, the market continues to remain subdued. So therefore, in our case, the growth ranged only from 5 to 10%. But having said this one, with the launch of the new products and during the Diwali season, that is in the months of November and December, are definitely going to be better in our case, and that's going to be the industry as such as well.
Right, so would be very interested to know, in fact, whether you've tweaked your inventory strategy in a scenario like this, where automakers rather have been particularly exposed to the slowing economy.
But let me tell you, in our case, we maintain an inventory level ranging from 20 to 40 days, which is the industry practice. So therefore, we normally don't make our dealers with a lot of inventories, but we go by the market demand. The forecast is done on a month-to-month basis. That's how the inventory is planned. So as such, let me tell you, because during the festival season, yes, there is an increased demand for diesel vehicles as of now, because of the price difference between petrol and diesel. And we expect, we definitely expect that this trend to continue for some more time.
Last question, sir. If you were to sum this up, or rather sum up what's happening right now, would you say that we're moderately better off than a few months ago, but much worse off compared to last Diwali?
Okay, let me tell you, because I would say that the growth has been only moderate, because the interest rate continues to remain high, and in the next midterm policy, I am sure Reserve Bank of India will reduce the repo rate. So once the repo rate gets reduced, going forward as well, we should be able to register this moderate cost. But having said this one, if you talk about the financial year, and I am sure, because although there were expectations in the beginning of the year that the industry is likely to grow somewhere around 10 to 12%, but that is pared down, and we don't expect this year the growth to be more than 2 or 3%.
Okay, I want to in fact take that up with Mr. Chaudhary. So essentially the feeling that we're getting, despite your survey, is the fact that this Diwali is not bad, maybe not great, but how do you hope things will change in the next 1 year? Would next Diwali be better?
Well, based on our internal research that we do on the Indian economy, definitely we are predicting the slowdown to get checked by late December, early January. Once this happens and the Indian economy enters into a new phase of the business cycle, which is like a fast growth phase, definitely the next Diwali should be much better in terms of spending by consumers. Yeah.
Your take on that, sir? Would next Diwali be much better?
Well, we are planning for this Diwali, and we will talk about the next Diwali when it comes. I love your program's title, We Mean Business. So we have to look at this Diwali first before we start planning for the next Diwali. So my brief to my team is that, it's when Mr. Chaudhary describes that the sentiments are low, it's like Chakravyuha, and we have to break the Chakravyuha like Abhimanyu. So we don't believe in negative sentiments at all.
Do you see your claims slowly being reflected into the IIP data, into the sort of core sector data that comes out, that maybe by next Diwali there's going to be a nice and sharp uptick?
Certainly, because we are expecting very, very buoyant, at least definitely next year. And this Diwali is going to be pretty good, and we feel that it should do well. Not the negative sentiments will go away, or the pessimism will go away. And this consumer confidence and the sentiments, etc., also one should factor that it is also volatile in terms of the economy.
All right, Mr. Chaudhary, Mr. Mahendran, Mr. Joshi, and of course Mr. Sheshadri, who joined us earlier, and P. Balandran of General Motors. Many thanks for joining us with your perspective. It's been a great discussion. But the general consensus on the worst case scenario is that there would be at least a moderate pickup in demand. Not a bad thing at a time when the general sentiment elsewhere is so low. That's a wrap on our discussion, but here's a quick look at the other top headlines of the day before we wrap up the show. Stock market regulator SEBI has today moved the Supreme Court seeking contempt action against the Sahara Group over non-implementation of the court's order asking the group to furnish all documents relating to its two companies directed to refund 24,000 crore rupees to their investors. The Supreme Court had on August 31st directed two Sahara Group companies, that's Sahara India Real Estate Corporation and Sahara Housing Investment Corporation Limited, to refund the money within 3 months with a 15% interest per annum for violating norms and raising funds from the public. Moving on to the latest in the battle between RIL and the Oil Ministry, the CAG has objected to conditions put by RIL for the KGD6 audit, shooting off a letter to the Oil Ministry regarding the same. This comes a day after the CAG said it does not meet the representatives of entities while their audit is in progress. CAG maintains that the audit report would be submitted to the Parliament and not to the Petroleum Ministry. The statement was issued in the wake of media reports suggesting that CAG has refused to meet the officials of Reliance Industries. The issue deals with the audit of expenditures incurred for developing gas fields in the Krishna Godavari basin. Wipro has delivered Q2 results in line with the market forecast, showing a 24% year-on-year jump in net profit for the September quarter. On a sequential basis, net profit has jumped 1.9%. IT services revenue came in at $1541 million. That's 1.7% sequential increase and a 4.6% year-on-year increase. Operating margins for IT services have declined 30 basis points to 20.7%. Wipro has forecast that revenue for the 3 months ending December would rise between 1.3 to 3.2% from the September quarter, in line with analyst expectations of a 1 to 4% growth. Let's listen in to what the management had to say.
This quarter we are guiding for quarter 3 at 1.2 to 3.2. So the range continues to be 2% and it is a scale higher than what we did last quarter. So from that point of view, we are making momentum, we are making movement forward. And so far as like we said last time, in some form you would have seen or observed that the guidance was a little muted because the India and Middle East piece of the business, which is about 8-9% of our revenue, was muted. You've been seeing the kind of a capital investment that is taking place in India, the decision-making delays that is taking place so far as government business is concerned. And we're seeing some amount of hope now based on these statements that are being coming up and softening of the interest rate that you're seeing and so on. And therefore we expect a little better in quarter 3 than we have seen, but it is not the kind of a growth that we have always seen and we would expect it to be. So if we were to moderate for that, for example, on a constant currency basis, quarter 2 our growth would be 7.5%. And if you were to moderate that vis-a-vis the India business growth rates, it will be about 8%. So same thing is reflected in quarter 3 in more incremental terms, like you said, the guidance being at 1.2 to 3.2%.
The pipeline remains to be actually very, very healthy. It's actually improving. I think what we are seeing is, again, remember when we say delayed decision making, it's compared to the past. Fundamentally, as people buy, as CIOs typically, really focus on their run business, they look for deals that they believe are going to be kind of optimal for them. And that process is, at least in my view, taking a little longer than we expected. But having said that, we've seen some closures towards the end of quarter 2. We see some closures happening in quarter 3. And to that extent, is it as bad as it was last year? I would say probably not. I see a glimmer of hope. There are enough deals out there. It's really the conversion rate that is slowing down a little bit as far as we are concerned.
Among the last to report monthly sales data is Bajaj Auto. The company came out with a stellar set of sales growth in October, posting the highest ever sales in the three-wheeler and domestic motorcycle categories. The country's second largest two-wheeler maker reported a 2.88% rise in motorcycle sales. Exports, however, fell by 4.4% during the month. In the three-wheeler category, sales grew by 13.8% on a YOY basis. Total vehicle sales of the company went up by 4% on a YOY basis. The Orissa government has slapped notices on 27 mine owners, including the Tatas, the Jindals and Birla Group, and asked them to cough up a fine to the tune of nearly 58,000 crore rupees for raising iron ore beyond the legal limit in the Joda district and Keonar district. The Tata Group alone has been fined a whopping 33,000 crore rupees for excess mining in its leased mines. According to sources, the notices were issued on the 26th of October, that's 4 days ahead of the visit of the MB Shah Commission's third visit to the state for the ongoing inquiry into illegal mining.